Here's my top 5 1-to-1 risk reward setups of the week. The strategy I used is pretty simple. I'm just scalping unfilled 15-minute fair value gaps as soon as they get created, but I don't enter right away. If the third candle that creates the fair value gap closes back within the range of the second candle that displaced, this is my cue. From there, I look for a confirmation, which would be an inversion fair value gap, a breaker block, an order block, an SMT divergence, and signs of aggression to scalp the move back towards the unfilled 15-minute gap. The first trade of the week happened on March 24th. We displaced so aggressively that we created a bearish 15-minute fair value gap. The third candle failed to close below the second candle's low, and then we created a bullish order block back to the upside. And this is how I scalped the move back for a 1-to-1. Second trade happened on March 25th. Same thing, we created a bearish 15-minute fair value gap at 8:30. And when we create that fair value gap, it tells me that sellers were so aggressive that buyers didn't have a fair exchange. So then for the market to be efficient, we need to trade back towards the unfilled fair value gap as soon as possible. Then I want to see if the third candle that creates the fair value gap closes back within the range of the second one. And if it does, I look for an inversion fair value gap, which happened in this case. Third trade of the week also happened on March 25th. We had a bearish 15-minute fair value gap created. We're looking for longs. Then we had a 1-minute inversion fair value gap to the upside, waited for the confirmation, entered longs for a 1-to-1 risk reward back towards the unfilled fair value gap. The fourth setup happened on March 25th also. We created a bearish 15-minute fair value gap. The third candle failed to close below the second candle's low, then looked for longs on inversion fair value gap plus an order block. Finally, for the last setup of the week, I waited for the fourth candle to close back within the range of the third one, which is pretty unusual, but then scalped the move back towards the unfilled fair value gap using inversions and using an order block. Stop trading inversion fair value gaps randomly, use a framework, use a 1-to-1 risk reward,